Hello, crypto enthusiasts. Hades speaking here from the underworld. Yeah, market is bloody right now, and we are experiencing a dump like I spoke about in my yesterday's video. I was expecting the bottom to form somewhere. Here, I said it would be this week, and with the peak escalation in selling for BTC, we have been seeing a lot of dumpage, massive liquidations on the horizon. Bitcoin hit 60k, even went a little bit under on a few exchanges. Ethereum under 2k as well, 1.8k for Ethereum. Now just hitting 2k back. Fear everywhere. But I'm calling it once again. So if you're in panic, you might want to watch this video to know what's coming. The bull isn't dead. This is capitulation mode, and a bounce is coming and brewing. So today I'll walk us through quickly on the Coinglass liquidation data. We'll look into the several indicators on why I see Bitcoin and crypto to still be in for a good 2026 and 2027 even better. So let's dive in, guys. Remember, do your own research always. Try to learn and develop your skills so you know how to move around the market and you don't blame others. Okay, let's jump in. So, at first, important to understand the liquidity levels. Liquidity is where the money is to be taken. So, stop losses, levels of liquidations for traders. The price usually goes there where there is most liquidity. And as we see here on the BTC USD liquidation heat map, a lot of liquidity has been taken from below. If you look at the left bottom side of the chart, there are no more liquidation levels to be taken. Here, because of the last wick, which was formed around 60k, there have been some stop losses there, but looking forward, looking above, there's a lot more money to be taken above these levels. So if you're a trader, you would want to understand the concepts of liquidity, and usually there where most people have their stop losses, there you would want to have an entry, because that's how liquidity is positioned. The market makers would take these levels. So since we have already dumped a lot since a month, we've been at 120k, now we're 60k. So much liquidity to the downside has been taken, and it's clear to see that most of the liquidity is to the top. So most of the traders here were positioning short, and this means that it was an overcrowded trade, and the same as the longs and the spot holders have been squeezed. Now the trade is showing that a reversal is coming. The reversal might not be quick, and we would probably form a range to find the bottom, double bottom, somewhere around 60k. Another important metric for us to look at are two biggest companies here in crypto. MicroStrategy is one, and now named Strategy, and the second one is Bitmine, which have been focused on solely accumulating Bitcoin and Ethereum, respectively. Meaning Bitmine has just been buying ETH. So now Michael Saylor, with his strategy portfolio, is currently at $4.5 billion in loss, while Tom Lee is $7.5 billion in loss, which would be around 50% almost for Tom Lee. These are massive numbers, and these guys will continue to DCA and buy to create their assets. Some people are speculating that, well, they need to be liquidated, that these assets need to change hands. Maybe, but this will not happen anytime soon. And they are still strong, and they still will be getting more budget to buy. So if you see such numbers of these holders in massive losses, which were the biggest bulls, you need to understand that the bottom is close. We looked at BTC liquidation heat map. Now we're looking at ETH liquidation heat map. Same story, is that just ETH dumped also around 50%. Actually, all-time high was around 4.9k per ETH in US dollars, and it went all the way down to 1.7k, which is a massive dump. Because of this, same story, ETH and BTC, one of the assets which are the safest in crypto, can experience massive dumps, and the people who just joined crypto in the latest runs forgot how these things look. So with this rapid and dynamic dump, because just in 24 hours things change in 10%, where usually in stocks you don't see such changes, same can happen the other way, meaning that the prices will bounce quickly, and then the shorters or the people who are sidelined waiting for lower prices would still be not in the train. They would miss out. The last picture which I want to show you on why we are not topped yet, and while the bull market and bear market cycles may be a lot shorter now than people are expecting the 4-year cycle to be playing out, you should consider the bull market peak indicators, which are focused on showing you when to sell at the top. So actually none of these 30 indicators have been hit, and because of that it's highly unlikely that this model would not be effective in any way. Currently we're a lot lower than we were, but even at the top of the range, that means 125k, most of these were not hit. So to understand what moves are advised to be making, now is the time to find your stable coins, find your funds, and start deploying. Whoever was patient, whoever was waiting for the right moment, this is the time. And guys, the most important, I would say, is to look at the sentiment. We have to look at the sentiment, and the fear and greed index is one of the indicators which show us that, well, most of the market participants are in shambles right now and are in massive fear. So if you would just simply buy when there is extreme fear, currently CMC crypto fear and greed index is showing 5, which is massive and one of the historical lows, and just sell when the fear and greed index is high, around 90 or 100, and you will probably be profitable. At the current stage, it seems as the opposite thing to do, but that's how money is made in this market. On the short term now, guys, we are 1 hourly looking at the 1 hourly chart. on Bitcoin, we have been experiencing a bounce from a few hours back. After 60k has been hit, we have been slowly grinding up. But as I said, we will be testing again the lower levels and forming a double bottom, maybe triple bottom, to establish some range. And with that, there will be a chance to jump into positions as well. What is interesting that the open interest has been going up lately here, while the price is struggling at 68k. So 69, 70k would be the levels to look into for potential sell zones if you bought the low for short term. But here we're focused on the long term, and these levels are good for the long term. Okay, so same CVD, we're saying more spot volume than perps. This is something you want to see once the market is bouncing. Open interest, funding rates. Still, the market has negative funding rates. Funding rates tell you if most of the market participants are long or they are short. So if they are short now, means that it would be good to squeeze them to the upside. So the price should be moving to the upside. So these players start closing their short positions and making more room for the buyers, right? So if a short seller is closing the position, means the buys are coming into the market then, and there's less sell pressure. So open interest is something to observe. We're seeing a green candle here. More shorts seem to be piling in as we look at the funding rate last candle, but more leverage is entering the market after the massive squeezes. So worth to take a look. I'm using Coinglass here. It's a good tool for anyone to check out and get some more data about the market. It's completely free. So yeah, based on what I've been telling you, we've been pretty spot on here so far, and I wouldn't say this is a time to panic. I would say this is a time to lock in, to strategize, to think what you want to be moving with in a couple of months ahead. Get your DCA in, and well, most likely 2-3 months, and we'll be seeing a lot of upside once the macro economy gets sorted. So yeah, join my Telegram channel as well, where I will be sharing more low cap plays, aiming to multiply the investment in a short time, going on chain, and that will be the place where the alts will flourish. They will be locking in to get those prints. So stay strong, stay focused, don't fumble your positions, don't over leverage, and see you next time.